Well, good morning and welcome to Business Morning. Today we're following the money, breaking down the latest corporate earnings, checking the pulse of the FX market and looking ahead to what 2026 could mean for Nigeria's real estate market. Where are the risks and where are the real opportunities? Well, let's get into it now. I will see crude oil prices jump sharply today, with U.S. crude climbing 3.5%. That was based on what played out yesterday, but we're seeing a big drop there, 1.41%, $64.37 a barrel. That's for Brent crude. WTI, that's lost that $60 level, 59.76, 1.73% down there. And definitely we'll see what's playing out with geopolitics right there with Iran. Definitely that boosted the market before now, but now we're seeing a drop right there for oil prices. Then for the FX market, we see the Naira hit a record high on Thursday, closing at 1,396 Naira, up about 0.25%. We're hitting this level for the first time in a long time, the strongest level in 2 years since the launch of the electronic foreign exchange matching system. This rally reflects growing confidence in Nigeria's macroeconomic policy, supported by stronger FX inflows, rising external reserves, and improved market governance. According to the central bank, the Naira has gained nearly 19% since FMs was introduced in December 2024, when the dollar was trading at 1,616 Naira to the dollar. Investors and businesses are closely watching this trend. This could signal a more stable FX environment ahead. So that's a close yesterday. We'll see if this continues for the TGIF trade. That's today. All right, let's get a check on the stock market. Closed higher yesterday as positive market sentiments lifted key indices despite slower trading activity. The all-share index rose 362 points to about 165,527, 0.22% up. And we see equity cap there, that's sitting at 105.96 trillion. Let's look at other parts of the market now. That's checking out the top gainers. RT Briscoe top there, 10% rise. Lotus Hall 15, 9.98% advance, and Score added 9.91%. HM McCall, that's 9.84% down, and Union Dickens Salt 9.79% down. We see UPL closing at 5.75 yesterday. So that's the color. And the top trades: QTix, Veritas Capital, and GT Co. They topped the trades yesterday. Definitely looking out for what will play out in the market today. And it's definitely earnings season, and we're seeing a lot of earnings rolling in. And we see FCMB, the bank reported strong interim performance for 2025, posting a pre-tax profit of 200.91 billion, up by 80% from on the back of robust revenue growth and surging interest income. I would see that's up 61.2% interest income, interest expense 26%, net interest income, that's up 122%. Total assets, that rose 6.9%, and we see the equity there 19.5%. One of the big financial services companies there. Let's look at what's bearish and bullish for this results. There definitely we see the gross earnings, that's bullish. Interest income, that's also bullish, and net interest income. All right, let's get a check on other stocks now. We see for BUA Foods, we see the revenue 1.8 trillion 2025, up 18%. Gross profit 24.29% up. A stellar performance right there from BUA Foods, and definitely we're seeing it's quite bullish sentiment there when you look at these earnings. That's for the Q4 earnings. Total assets, that rose 26.54%. Profit before tax up 88.12%, 534.8 billion naira. That's what it made in 2025. So that's for the consumer goods giant there. Let's look at Alcomo Oil now. Alcomo Oil Palm Company PLC delivered a stellar financial performance for the year ended December 31st, 2025, with turnover surging to 198.15 billion naira, a significant jump from the 130.06 billion naira recorded in 2024, driven by a massive increase in local sales, which reached 172 1.63 billion. They have it. Revenue 33.7% up. Operating profit 69.6% up, 50.79 billion. Profit before tax, that's at 61.5% up compared to the previous year. Profit before tax 75.9% up, 34.28 billion. Earnings per share, that's up 76.1% at 35 Naira 93. So definitely a good result there for Como Oil. And we'll see how investors react to this. It just launched it right there on the NGX portal. All right, to other stories now. CSR for macroeconomic development, reflecting gains in the macro economy at the micro level will require more social corporate responsibility. That's according to conversations at this policy dialogue on corporate social responsibility and the role of businesses in creating sustainable national development in Nigeria. The Group Managing Director, Pacheda Group, Mrs. Joy Hiawena, is asking more businesses to get involved so as to eradicate poverty and reduce the threat to the operations of businesses. Take a listen.
Why government remains the primary driver of public policies, the private sector increasingly occupies a strategic position in job and wealth creation, in skills development and entrepreneurship, in community stability and social cohesion, in infrastructure support and service delivery, and in human capital development. Corporate social responsibility, therefore, must evolve from the token gestures and isolated donations into strategic, sustainable, and people-centered interventions that align with the national development priorities and measurable outcomes. Corporate social responsibility, when properly designed, strengthens communities, it de-risks environments, and builds long-term social capital. This approach deliberately focuses on transitioning beneficiaries from dependency to self-reliance, creating micro-employers rather than perpetual job seekers, strengthening local economies at the grassroots. The emphasis is not on handouts, but on capacity building and dignity-centered empowerment.
And now to our first conversation. We see the real estate market in 2026 is, navigating through a post-pandemic recovery, shifting work and living patterns, elevated inflation, and evolving investor behavior. With new financial models and technologies influencing, property demand, investors and home buyers are strategizing around long-term value and rental income and tax implications. Joining me to unpack this is Mr. Benga Ismail. He's a partner at Ismail and Partners Estate Surveyors and Valuers, joining me via Zoom. Great to have you on the show. Good morning.
Good morning. Can you hear me?
Yes, I can hear you, sir.
Thank you very much.
So let's try and unpack what's to expect for Nigeria's real estate market, in 2026. We're still seeing the housing deficit. That's 22 to 28 million homes. That's a big number. I'm looking at Nigeria's housing deficit. There's obviously high interest rates there, between 18 to 27%. That's resulting in fewer buyers and stronger rental demand at this point. So break it down to me. What have you seen so far? I know you operate in this industry. What have you seen so far in 2025? And what are the trends you've noticed?
Thank you very much. Obviously, the biggest headline in 2025 were the screaming rents, the screaming figures that everyone is seeing. From January 2025 to December, everything was about high rates, 100%, 150 rental reviews. Also, you saw capital prices also going north, and that, for me, was the headline for 2025 in the real estate market. Where did these prices come from? What happened? What are we dealing with, and what's going to happen? And this coming to 2026, the big first question is that, will this continue? will this price increase continue? And we must look behind the curtain. Why did this happen? The last time anything like this occurred was sometimes 2007, 2008, where we saw prices galloping in this sort of direction. So the trend you ask to answer that question simply is, what exactly is driving this market?
So, definitely looking at the rise, the price rises in 2025, what are you projecting could be the percentage growth in, property prices in 2026? Do you see the same trend from 2025 coming into 2026?
Look, I don't think it's sustainable. It's definitely not sustainable in the direction it was going. But when you look back as one may have caused it, obviously we look at the FX market, capital construction cost readjustment, inflation, and all of those things. Those are the things that were definitely behind the readjustments. Now, usually we see prices because income has increased, mortgage credit has improved, but none of these things happened. Yet prices went up, and if prices were going up, income wasn't increasing, then where is affordability coming from? The issue simply is demand. Demand is outpacing supply. So we have that issue going on there. In 2026, will this happen? I don't think the price growth will slow down, definitely, because there's no way you put the prices at the level they're going and demand will keep happening. People will move to emerging locations, which we're already seeing. So I think there will be a readjustment in prices. There'll be stagnation. There'll be stagnant.
All right, Mr. Ismail. So sorry, I had to butt in there. Information for our DSTV viewers: we'll be joining live coverage for the Zamfara State Government commissioning various projects in Zamfara local government area. You can watch that. That's for our DSTV subscribers. You can keep following the money right here and all other platforms. Thank you so much, Mr. Ismail, there for helping us break down what's to expect in Nigeria's real estate market. But, looking at 2025, that was the year we had stable, the Naira was stable. We even had a strengthening, of the Naira. Inflation, according to MBS data, that tended downward in 2025. Couldn't that play into, lower prices in the real estate market, in 2026, or are they not enough?
It's still not enough. It is because, you see, the structural situation is simply that we do not have enough houses to meet the demand. But then you still have to build the stock. You have to build the stock. Inflation is still not at a level that makes construction costs level up. So the construction cost will still be high. Interest is still at 28%, you said. So opportunity cost of using the funds to even build these houses are still a factor. So we are not yet at the point where we will see the prices equal affordability. We're not yet at that point. So we're at a stable point. FX is stabilizing. Interest rates is coming down in bits. And then inflation, which is the most important aspect, is gradually coming down. So we hope construction costs will then stable and go back south. But it's still going to be another 12 months before we get into the place we want to. But then demand is still going to be pushing stuff up. And prices, I still believe, will go up, but not in the same manner it went up in 2025. But in 2026, slight growth, slight price increases, but not much. Now, the thing I want to say is that this is not value. A lot of people will see real estate as valuable because prices were going up. Prices were increasing, value was not increasing.
So if prices are increasing, but value is not going up, how does that work really?
Because you see, it's about yield. Yield, cost, and returns. So your post yield after tax position doesn't technically give you a better position. That's why a lot of people are putting money in the treasury bills, when treasury bills were about 18, 19, 20%, because your return on your treasury bill yield was higher than your net return on your real estate investment.
All right, so, definitely, there's always that saying there that the real estate markets, that's the best hedge against inflation. Is that still the case at this point?
Of course, it is definitely the case. It's definitely clear over time. When you're taking a beating on your currency position, it hits you immediately. But a lot of people will run into real estate investment as a defense, because over time you come out of it. And research has shown that I think it's between 6 to 7 years, or let's say 5 to 7 years, your real estate investment starts paying you off. It turns out better when you look at what you put in it. But in the very short run, it really doesn't give you that return. But it is still the best defense for your wealth.
Right, I can imagine. I can imagine some of those metals investors there seeing the way gold has, performed from 2025, into 2026.
Yes, so that's another phenomenon that's happened. People have run away from cash and put their money into gold, running away from dollar, putting their money into gold. So really, that's where it is.
Right. So looking at, the cities and regions in Nigeria, which would you say are expected to, outperform others in the 2026 property price growth?
You want me to start quoting stuff here? I don't want people running to locations and coming back and saying, what emerging markets, they're all opening up. Ibadan is opening up. The Ogun State corridor of Abeokuta, Shagamu, and they're all opening up. In fact, I've seen people, some investors going to Asaba, the Delta State, all of these places. Ekpe corridor is right now booming. Badagry is going to open up. A lot of this is driven on the back of infrastructure, and people should watch where infrastructure is going. Follow that and go before it gets there. The minute government speaks about opening up a place, go there. Lagos is getting tight. The prime location of Lagos, we all know, is getting tight. So we can't all be in the center. So you look outwards. Anywhere infrastructure is building up to, where title is safe, where it's secure, and you have access to documents that protect your investments, those are where emerging possibility. Usually it takes 7 years, 8 years, but secure your position, make sure it's watertight, and make sure it's land. When I mean land, make sure it's something you can actually see.
So looking at some of the trends there, with the whole Dirty December, celebrations and all of that, definitely we've seen the short-let segment. That's been getting a lot of attention, so far. And I hear there's a trend now with most long-term rental landlords now looking at, saying, you know what, I want to furnish this property and put it out there in the short-let market, even though maybe that property is in a corridor somewhere. Is that the right? Is that the right strategy?
So, I see you chuckled yourself. So look, everyone will run into short-let now because they can see they're hearing figures that they don't understand. But I tell you this, like I said, 2007, 2008 is when we saw this thing last. And that time I also went into short-lets, but I immediately got out of it. Seeing short-let is great. You get people paying you cash on a day by day, month by month, but it has its own issues. It has its own long-term, issues, management issues, void problems, instability, because if you don't own your buildings, you're confronted with the fact that rents can also go up on you as an operator. So you wouldn't even know where these things happen. So it's a very, very, in the same way it is short-let, but short-term, if not well positioned. It doesn't have the stability of long-term rental investment, but in the short run, it can help you. So whoever is going to go into it should have maybe a two-year plan. And when you look at it, invariably, is 30 December the only driver for this? If it is, then really doesn't make sense. But the fundamentals of the location, like Lagos Central, a lot of the shortlists we see, it's always in the center, the city center. So if you're in Lagos, usually Lekki, Ikoyi, VI, or on the mainland, Ikeja, GRA, and its environment. So I don't think anyone that is going to buy a block of flats or invest in a block of flats will get the same yield. So you don't think about that. All right. So anywhere, if you go in a city, any of the states, if you go to Enugu, again, you look at the center of the state, the capital city. So technically, those are where you will get the returns. But short-let, it's not easy to go into that investment. Don't go into it if you don't have the courage and stamina to deal with the issues that come with it.
Right, and talking about the issues with short-let apartments, looking at the amount of money some investors there make daily or monthly, does it outweigh the issues?
No, I don't think it doesn't outweigh the issues, because at the end of the day, you need to control the issues. For instance, I know some clients who invested, bought furniture, put it in their apartment, who were expecting that they would have a good turnout in December. But unfortunately, this wasn't rented in December. So you have furnished, that's a huge capital expenditure. You have power, you have generators, power energy services that are going on at the same time. You have staff you have to maintain in that period. So all of this, when you look at the yield over that investment, it's a negative return over time. So those issues are only positive when you stay the long run. So you might have invested in March, ready for December. But then there's April, May, June, July. You must have taken in that period. So what people usually do is they reduce their rates in April, the low season as I call it. And then when it comes to December, which is why people don't understand that the prices of December were outrageous, because they have to average out. So when it comes to December, when the highest demand is, you make your money back in that period. So for those who don't make the money back in that period, total negative yield, the red lights.
All right, let's look at the new tax laws. Definitely, that's on the minds of many Nigerians at this point. And I'm wondering if we're seeing any disruption with the new tax laws, when it comes to real estate transactions. One I've heard about is with the withholding tax in Lagos State, that's from the LIRS, and the tenant is a collection agent for the LIRS at this point. So if you're paying your rent, you're supposed to deduct the withholding tax, from that. And I'm wondering, is it that straightforward? Is it that simple?
Things. Withholding tax is not new. It's not new at all. It's something that have been always been there. I think the only issue is now pronounced. It's the government is now saying that it needs to be collected, it needs to be identified, and it needs to be paid. So it has always been there. It's not a new tax. So the 10%, it's only an advanced tax. The withholding tax is an advanced tax. It's a tax of the income you're receiving as either an investor in real estate. So it's not new. VAT is not been applied, and I think the only other one that has always technically also been there is the capital gains. Those are the three applicable tax in this new reform. And it's not a reform, but for real estate, these taxes have always been there.
All right, so definitely, I guess we're not seeing any disruption for real estate transactions with the new tax laws. I guess these taxes have been there before. So
yes, enforcement is what I think will improve. Enforcement is what I think will improve. Not that they are just being introduced. They will cause a disruption that we understand.
All right. So, looking at 2026, I'm guessing there are still investors out there trying to figure out, how to own that property that they've been dreaming about for the longest time. Are you seeing improvements on the horizon? When it comes to mortgages in Nigeria, that segment, are you seeing any improvement coming?
I am not saying, to be direct and factual, I'm not seeing improvements. I mean, we have mortgage companies, but I think the penetration rate is still below 5% at the current moment, and I don't see what will change this. The MRIF that has been introduced, one of the latest attempts to make sure this sector of the market changes. And I sincerely hope, with what I have read seen about MRIF, that it provides the right platform and improves from this 5% penetration to at least 20%. If we can get that. And there's been, the MRIF is the latest one. The mortgage refinance company was another attempt that was done. And all these different attempts are aimed and geared to improve the mortgage availability, but it really hasn't done much. And if we're measuring, we should be looking at penetration rates of the mortgage availability. And like I said, the fundamentals that need to change are improved income levels and available mortgage credit so that people can buy more homes in the market. So to answer your question, I honestly do not see immediately, but the attempts are being made at the moment.
All right, definitely. We'll keep watching your space, and I'm also wondering how, some tenants there are looking for property right now. Definitely, you've mentioned that there's not enough supply at this point, but the demand, keeps outpacing supply of houses. I guess still early days. We'll see how everyone's able to navigate this market in 2026. Thank you so much. Mr. Benga Ismail is a principal partner, Ismail and Partners Estate Surveyors and Valuers. Thank you for coming on the show today, sir.
Thank you very much.
All right, we see as data has become increasingly important in daily operations, stakeholders are harping on the importance of intentional protection of private data by individuals, the government, and businesses. Take a listen.
As Nigeria joined the world to commemorate World Data Privacy Day on January 28, the Minister of Innovation, Communications and Digital Economy reaffirmed the federal government's commitment to data protection and digital trust as critical pillars for Nigeria's digital transformation and economic growth. With the theme, Privacy in the Age of Emerging Technologies, Trust, Ethics and innovation, the private sector also has its responsibilities.
The trust means that the confidence users have that their personal information is treated with respect, securely protected, and used appropriately. That's trust. That you trust telecom, that they will use your data with respect and as you expect them to do. So that's trust. If you don't trust them, then there is no trust. Ethics means that moral principle guiding, governing the collection and storage and processing and sharing of data. This goes beyond legal because you are not there when they want to take the decision. When MTN is taking decision or banks are taking the decision, you are not there. So this speaks to ethics of an organization that are they fair to you with your data, and then are they transparent enough, and are they accountable to your data? Because you may give your data to a telecom, a boy in charge of the, we call them computer administration. They are always small boys, so he can pull out 5 million of that data and sell it for 5 million naira without the knowledge of the organization.
To participants here, privacy must become a culture, not just a regulation. It must be understood in boardrooms, in government offices, in startups, in classrooms, and in everyday digital interactions, although the backbone of making this a reality lies in the public sector.
Has always been coming up. We need policy. And when there is a policy, if there is no enforcement, there is nothing you can do. You can have 1 million policies. The enforcement matters a lot. The government needs to tell all the MDAs that they should have a common database. And when they have a robust database, if you need anything, you go to that database. Not Ministry of Petroleum having one page, Nigerian Security Defense having another base, another one having another data somewhere. If you have a centralized database, you all come into that central base and then you can draw information from those database, and that will go a long way.
Beyond the government, though, it's generally agreed that protecting personal data means protecting Nigerians, and the responsibility is on everyone.
All right, we'll take a break now. When we come back, review what's played out so far in Nigeria's equities market. That's in a moment. Just stay with us. All right, this week, Nigeria's stock market has had its ups and downs at this point, seeing the way it's played out so far. But I guess it might be a positive week. We've seen gains, we've seen losses, and market sentiment has responded to corporate earnings, economic data, and global cues. Let's break down the key movers, sector performances, and what it means for investors. Going into next week, let's talk to Abiodun Didotuna as a trader, First Securities Brokers. Great to have you on the show. Good morning.
Good morning, Laddie. Good to be here.
Fantastic. Yeah, we're seeing the earnings rolling in. I did spotlight FCMB, BUA Foods, and we also had Como Oil registered this morning. Talk to me about what you've seen play out so far when it comes to most of these earnings.
Yeah, thank you very much, Laddie. It's pretty much been in line. Investors already anticipated most of these things. By Q3, we saw the Q3 numbers, and the run rate has been pretty much steady. The thing there is that where do we go from here? These are the questions, and what type of corporate actions is going to be coming after these earnings. These earnings are still guided. I see based on guidance, they will still have to go for audit and whatnot. So investors are still playing it a bit safe, but going forward, where do we go from here? That's what's playing in the minds of most investors.
Right, and looking at the last trading week of January, I guess the month really ran fast this time. How do you describe the month of January trading?
It's actually been mixed, I think the very first 2 weeks there was a little bit of aggression. Of course, it slowed down, and it's been this week has been more like lukewarmish. As at yesterday, the ASI was about flat for the week. Today, it's looking like it's a bit up, but we are not seeing so much. Everybody is still asking questions. There was a lot of gains booked in 2025. Can these companies continue to sustain this momentum, say by Q1? So, and what type of corporate actions are they going to be expecting? On the banking side, there is forbearance on some banks. These are questions that are also, weighing on investors' mind. And before you make that further leap, you need to be sure that it's going to be very, very rewarding.
Right, and definitely we're going into the trading month of February. What are you expecting? What do you think is going to drive sentiment?
Of course, earnings, corporate actions. Would expect that will begin to drive sentiment. I will begin to see more of the interest, and of course, policy direction, MPC, what the MPC will be doing in February. The direction of the economy, and all the economic data will drive direction. So these are critical for the month of February.
All right, we've been seeing a lot of action, when it comes to the global commodities market. We're seeing gold, even though it had that big drop yesterday, but recovered, some of those gains, but it's still trading at, all-time highs. About $5,400 to $5,300 per ounce. Do you have your clients talking to you or asking you about gold at this point?
Of course, we would not be thinking about gold. The order of the world is changing. A whole lot of things happening from the U.S. side of things based on the current presidents of the United States, and quite a number of emerging markets already weighing their options. You understand, away from the dollar and things like that. So the only thing is for any investor is to say, I need a safe haven. Gold with gold, you can never lose the bet.
Right, and definitely, how can investors here, have they been able to get exposure to that gold market? Do we have ETFs, tracking gold here in Nigeria?
Yes, we have one ETF called New Gold. Of course, we've seen a bit of demand, but they are not so much traded because, of course, liquidity is very, very tight in that space. But we've seen a bit of demand here and there.
All right, and definitely looking at the Naira, it seems to be kicking off really bullish in January. Did see that big gain yesterday. So official window 1.3 level, 1.4 has been broken so far. How do you think this is going to shape investor sentiment in stocks?
The strength of the Naira, it's more like you're giving bigger purchasing power, to the people. And when you get bigger purchasing power, it tends to drive consumption. So pretty much when it drives consumption, I'm going to look at what will people really look at, the hierarchy of need, food, clothes, shelter. So companies or industry sectors speaking to that are things we should watch out for.
And definitely come back to the earnings at this point. We have a lot of investors out there that don't really know what to look out for, when they see some of these earnings reports. And definitely, investors always react maybe to a beat or not, when it comes to some of these earnings. What do you think investors should be looking out for? Like a novice investor here that's looking at most of these financial reports and don't really know what to make of it or the next action to take when it comes to that stock?
There are a few key metrics which anybody can easily calculate. One of the easiest one is price to earnings ratio. So the easiest way is to look at the financial statement and say, what is the EPS, earnings per share of this company, and how much is the PE ratio, which is the price to earning ratio. So the simple calculation is if a stock is earning 1 Naira and the price is 10 Naira, just divide it, and it takes the number of years it will take for you to be able to recoup that investment based on earnings. So the lower it is, the PE ratio, you understand, the better it is for you.
All right, and looking at some of the latest earnings now, the likes of BUA Foods, I guess when you look at the bullish side of things, profit before tax, that rose by 88%, profit after tax, 91%, revenue, that rose 18%. There's also lower finance costs and, a stronger looking, balance sheet. But the bearish part of it, we're seeing operating and distribution costs, that rose. Cost of sales, that's increasing. And it seems they're still exposed to currency and input costs risk. But, 2025, that was a year, the Naira was quite stable. And now we're seeing the Naira strengthen, in 2026. Do you think investors should be worried, about when it comes to cost of sales rising, looking at some of these reports?
Not so much, especially for the consumer goods, not just BUA Food, for the consumer goods. They should do a whole lot better, because with a stable FX, they will be able to plan better. And if FX continue to strengthen, they'll be able to give more to consumers in terms of pricing, and consumers will be able to take more advantage in terms of demand. So not so much. Sometimes you might see a little bit of, spike here and there in some one or two cost element. It doesn't really mean, it's bad for the business. Sometimes you might need to cut a little bit of margin on cost side to be able to get better volumes.
All right, so looking at the sectors that we track, oil and gas, consumer goods, banking, insurance, industrial goods, what do you think which sectors do you think investors should, be looking at when it comes to this Q1 and, most of the earnings, coming out at this time?
I think it's very, very critical for investors to pay attention to the consumer goods. Also pay attention to what's coming out from the telco side of things, MTN in particular. And you can't, of course, the market is always, or the economy basically is always run by the banks. But in that order, I think it's very, very critical.
So looking at consumer goods at this point, do you think investors will be encouraged, by some of the earnings that they see, like the likes of BUA Foods now having a profit before tax up about 88%. Do you think other consumer goods giants there could replicate the same type of performance?
It varies. In terms of replicating, I don't think so. But some of them are coming from position of recovery from what happened in 2024, where they made a lot of losses due to FX costs and constraints. So you continue to see that recovery being amplified, as at least you look at companies like your Nestle, your Nigerian breweries, and you begin to see those numbers, maybe PZ and a few. You begin to see those numbers, you understand, doing a whole lot good.
All right, then looking at oil and gas, definitely we've seen the oil markets, a lot of yo-yo movement. There's been the range trade so far. We kicked off the week strong, with oil prices almost getting to $70, but we're seeing a pullback at this point. What do you think is driving sentiment there, and how do you see that, affecting oil and gas stocks in Nigeria?
There are so many things, the time of the season, oil prices, usually there's a lot of, consumption when it's summer, kind of. So it's not important it's not surprising to see this yo-yo movement. For the oil and gas companies, I think they'll still do well, especially those ones listed, for those on the upstream side, Aradel, your Sepla, they'll still do well, but in terms of they are still trying to ramp up capacity, that should offset, any marginal move in the near term. But, on the local investor side of things is, will it be able to match returns in the local currency? If FX continue to strengthen, you might begin to see a little bit of decline. So the jury is still out on that.
Watching out for that, but what are you seeing for the TGIF trade today? Are you seeing a green close?
I expect a green close.
All right, we'll definitely be watching out for that. Thank you so much, Abiodun Adedotu, as a trader at First Securities Brokers. Thank you.
You're welcome.
All right, we're going to find out what's playing out in the global economy in a moment. All right, we have Ini with the details at this point. Good to have you, Ini. Good morning.
Good to have you too. Good morning. Oh no, good to be here.
Yeah.
You're having me. Good
Exactly.
morning, laddie. Well, let's find out what's happening in the world. Good morning, everyone. Of course, President Trump is leading all of that. After that rate hold, which we saw in the United States, we hear that the President, Donald Trump, is preparing to nominate former Federal Reserve Governor Kevin Walsh to succeed Jerome Powell at the head of the central bank, and several reports have shown this since yesterday. The report came shortly after Trump told reporters at a Washington event that he will announce his nomination for Powell's successor today, this morning. They're still hours away. And Trump's comments also suggest that Walsh will be his pick, given that the former Fed governor had lost out to Powell for the top Fed role in 2017 during Trump's first presidential term. Mr. Walsh has since spent years publicly criticizing the Fed. He was seen aligning himself closely with Trump's views over the past year as the central bank should cut interest rates aggressively. And of course, reactions have been following this. The metal market, gold, which we've seen gain many highs, many new highs since last week. Prices fell in Asian trade today, hit with extended profit taking after the U.S. President Donald Trump signaled that he would announce his nominee for the next federal chair later on today. Spot gold slid 3.6%. From about 5,500 it was yesterday, it's now 5,180 per ounce. Gold futures for April also fell 2.8% to 5,199. And then prices still remain on course, though, for a stellar January after hitting a series of record highs in the month. Bullion prices had risen to a record high of nearly 5,600 on Thursday after reports indicating that the U.S. was planning more attacks on Iran, ramped up demand for safe havens. And talking about reactions to that, let's find out how the market closed, and that's in the United States, of course, following those indications given by President Donald Trump. Our correspondent, Maria Bird.
The U.S. stock market was a bit challenged on Thursday as the Dow Jones was slightly above flatline and the S&P 500 was down at 0.2%, while the heavy tech Nasdaq led the day of losses at 0.7% down. Many investors were a bit frightened by the AI spending reports, which showed mega cap companies that had major losses in earnings, as this was a clear indicator that we could see a downward spiral in the next few days and weeks ahead, specifically companies like Microsoft, which saw major losses on the day, up to 10%. Investors continue to watch the market through Friday to see if there is any type of upward swing before the end of the week, but there is hope that next week we could see an upward tick in the U.S. stock market.
Thanks a lot, Maria. Well, of course, talking about AI is dominating conversations globally now. AI spending increasing, however, jobs being cut. Finding a balance within that is also another side of the conversation. But still along that line, though, we see Apple reporting blowout first quarter earnings and predicting growth of as much as 16% in the current quarter. That's the first quarter of 2026. This matches the period that just ended. Sales, they say, could be even better if the company could secure enough chips. Yes, that's another topic, to meet its customers' iPhone demands. Instead of dwelling on memory, Mr. Cook focused on rising demand and the company's lean inventory, and he says that's what's keeping Apple from making more iPhones chips. Access to it, especially to advanced node manufacturing for its A series and M series chips, which the company calls SoCs, or System on Chip. Well, Apple manufactures its advanced node chips with Taiwan Semiconductor Manufacturing Company, which dominates the market for leading node manufacturing. And Apple says that it was seeking manufacturing on the company's 3-nanometer node. And that, of course, still remains what they are looking forward to. But still, on how to handle that, we hear that Apple is prioritizing production and shipment of its 3 highest-end iPhone models for 2026, while delaying the rollout of its standard model. And that's because of marketing strategy shift and supply chain constraints, one we just mentioned. Nikkei Asia reports that, citing 4 people, that the U.S. tech giant will focus on delivering its first ever foldable iPhone. I know Ladia has been looking forward to this. And 2 non-foldable models with upgraded cameras and larger displays for a flagship iPhone 18 that's now slated to be shipped in the first quarter of 2027. The move is aimed at optimizing resources and maximizing revenue and profits from premium devices amid rising costs of memory chips and materials, and to minimize production risks tied to the more complex industrial techniques for Apple's first foldable device. And away from the US, generally now, China has given its top AI startup, DeepSeek, approval to buy NVIDIA's H200 artificial intelligence chips with regulatory conditions that are still being finalized. That's the report we're hearing, and it suggests that Alibaba 10 said they had been given permission to purchase more than 400,000 H200 chips in total. NVIDIA's CEO told reporters that his company had not received such information, and he asked that he believed that China was still finalizing the license. And China's Industry and Commerce Ministries have granted approvals to all 4 companies, but have stipulated that they will impose conditions that are still being finalized. So I guess that's why NVIDIA's CEO hasn't heard that yet. And a growing number of global investors plan to add money to their China-focused hedge funds this year, 2026. And that's a stark reversal from the stampede for the exit only 3 years ago. This is according to an annual survey by BNP Paribas SA. A net 14% of investors intend to channel more capital to China funds this year, with about 9% of them already having done so last year. These are amidst a broader shift away from the United States assets. And the survey shows that appetite for exposure to the world's second largest economy this year is only slightly lower than interest in the North. And talking about job cuts, AI, and all those threats coming from the new order of the world, it's from Signify NV. That's the latest now. Well, they say they are launching a 180 million euro cost reduction program that would eliminate 900 positions as the Dutch lighting company grapples with weakening demand and mounting margin pressure across its businesses. The company reported fourth quarter comparable sales. It went down 5.2% to 1.49 billion euro, while the adjusted earnings before interest, taxes, and amortization declined 10% of sales from 12.4% a year earlier. Net income dropped also to 60 million euro from 119 million in the prior year. So it's obviously a worrying trend that we're seeing in the world now. We're celebrating AI, the ease it brings to businesses and jobs. But on the other side, it's also bringing a lot of announcements of job cuts. And that's it from the global space.
All right, thank you, Ini, for the details there. But just a quick correction from earlier. We're seeing Brent, that's trading at $70.35 a barrel. WTI, that's at $64 a barrel. And definitely both contracts there rose about 3% yesterday. But we did see a pullback this morning for both. But Brent still at $70 per barrel at this time. And looking at Nigeria stock market, that's open for trading. Right now, we're seeing a marginal gain there, about 6 basis points. Stocks getting attention. Veritas Capital, that's up about 9.87%. At this time, we'll see if that, continues. Tantalizers also in the green. Japogo, Nimeth, we're still seeing profit taking there. I did, talk about some of those pharmaceutical stocks there rising, but we're seeing profit taking happening there with Nimeth. Then for the top gainers, Deep Capital Management Trust again, still getting attention from investors. Infinity Trust Mortgage Bank, Score Nigeria, that's getting attention there from investors. Then we see on the losers chart, Total Nigeria, that's down about 10% at this hour. So we're seeing profit taking happening there, and definitely we did see the results for the company recently, and there was a lot of pressure there, especially for their PMS business, looking at those earnings. So definitely we're seeing investors react to that. We also see Geregu Power there, Guinness Nigeria, and Living Trust Mortgage Bank also getting interest from investors right there in the stock market. We'll give you more updates at 1:30 for what's playing out in global markets that we track, and also the NGX. Thank you for watching Business Morning today. The TGIF trading. We'll bring you more updates later on. I'm Ladi Williams from the team right here at Channels HQ. It's back for now.